Welcome back, folks. In today's session, we are diving deep into a core concept that is very misunderstood, and that underpins how price is algorithmically delivered, which is the change in state of delivery, or CSD. Now, this isn't just a pattern, okay? It's the confirmation that price is flipping from one delivery mode to the other. And once you can read this shift, your entries become mechanical and high conviction. Before we go into CSD, you need to understand one core truth, and that is that at all times, the market is either in a buy program or a sell program. There's nothing in between, okay? In a buy program, the algorithm is delivering price towards buy-side liquidity, which typically rests above old highs. In the sell program, it's delivering price towards sell-side liquidity, resting below old highs. Let's take a look at an example. Here you can see that the market is coming down. We have a change in the state of delivery at the right time after taking out liquidity on the low side, and then the market reverses to attack buy-side liquidity. Now, we'll go into more depth, but this is essentially where the market is in a buy program and is attacking buy-side liquidity. Let's have a look at a sell-side example where the market was in a buy program, then we have a change in the state of delivery, and the market then attacks not only the trendline liquidity, which is on the sell side, but also these equal lows, also, which is known as sell side liquidity. Okay? Now, let's talk about change in the state of delivery, or CSD. This marks the transition point where price stops being delivered to one side and starts delivering to the other side. Okay? As I said before, CSD is not a pattern. It's not a signal you trade on its own. It's a confirmation, a algorithmic signature that confirms the algorithm has shifted delivery modes. So when we shift from a sell program to a buy program, CSD confirms it, and vice versa. If we go from buy to sell, CSD confirms that too. Okay? The actual mechanical confirmation of CSD is a market structure shift. It's the moment the market shows you it's done delivering to one side and is ready to deliver to the other. Here's how that looks. In a sell program, price breaks above a high that set up that final sell push. And then we enter into, and the market shifts into a buy program. Okay? So let's have a look at an example where the market was in a sell program and then after a market structure shift enters into a buy program. Okay? And the way that you detect that is that it breaks above that high of the final push down prior to entering into the buy program. Let's take a look. So here on the left-hand side of the curve, the market is in a sell program of this market maker buy model. And this here, this high, is that last high prior to this push down, where the market then goes above that, okay, at the right time. That then starts to form the right side of the curve, meaning the market is now in its buy program within its market maker buy model, now attacking buy side liquidity above, okay? Now, when the market is in a buy program, it then needs to break below the low of that final push up to then enter into its sell program of a market maker sell model. Let's take a look at the chart. So in this example, you can see the market is currently in a buy program within a market maker sell model. And this is the low, the last low prior to the last push up that the market then goes through, changing the state of delivery, changing from delivering the buy program, entering into the sell program of the market maker sell model, attacking not only this trend line liquidity, but also equal lows below. Okay? Now, when CSD happens, we also want to see imbalances, okay, fair value gaps, that form during the market structure shift. These imbalances, when respected as support or resistance, give us further confirmation of the shift in delivery, okay? And here's the key. The logic is fractal. You'll see this on the 1-minute chart, the 15-second chart, the 4-hour chart, and even the daily. It's the same structure, the same delivery logic, just at different speeds, okay? So let's take a look at a couple of examples. So here you can see the market down here, okay, currently in a sell program, okay, taking out this liquidity, trendline liquidity. Then we have that last high, right, that triggers the low, right, the high that triggers the last push lower will then displace through that high with bullish fair value gaps, okay, to confirm our market structure shift. Now, the algorithm is changing from the sell program to a buy program within the market maker buy model. And we have our market structure shift, the change in the state of delivery, right, of price, going from the buy program and heading over to going from the soared program and heading over to the buy program in the overall market maker buy model. Okay, and then you can enter into the position on any bullish ICT signature, such as a breaker or an inversion fair value gap or a bullish fair value gap if you're going to pull back down. In this case, we've got to pull back down into not only the breaker, but also the inversion fair value gap. The market then attacks buy side liquidity above, which is the objective of the market maker buy model. Okay, let's have a look at another example. Again, we see that we have this high prior to that last push down. Okay, we displace through that high with a fair value gap, and any pullback into that fair value gap is a potential entry to enter a long position. That displacement through the high, right, prior to that last push down is your market structure shift. The fair value gap confirms your market structure shift, and that is the change in the state of delivery, where the algorithm is changing its state of delivery of price from the soared program to a buy program within this market maker buy model, attacking buy side liquidity resting above. Let's take a look at the soared side example, where the market was in a buy program, takes the liquidity on the left, and then see this low. This is the last low prior to that last push up, where the market then displaces through that low with a fair value gap. That is our market structure shift, which then confirms our change in the state of delivery of price, where the market, the algorithm, is changing from the buy program to the soared program within this market maker soared model, attacking soared side liquidity below. Notice that I am highlighting that these things are happening at key times, which we'll learn about in the time module. Okay, let's take a look at another example, a little bit more advanced. So again, we have the market currently in a buy program, takes out buy side liquidity on the left, okay, at a key time, okay. And in this case, we have an actual market structure shift over here, where this low that is responsible for the last push up is then displaced through with a fair value gap, where any return into that fair value gap is a potential entry to go short to attack relative equal low soared side liquidity below the market. In this example, we had multiple bearish ICT signatures to enter short. We also have a inversion fair value gap and an immediate rebalance, allowing for multiple opportunities to enter and accumulate short positions. Okay, so this market structure shift is a confirmation of our change in the state of delivery of price, where the algorithm is changing from its buy side delivery to its sell side delivery within the market maker sell model. Okay, once you start seeing, so you see clearly, your trading gets cleaner. You're not reacting, you're waiting for the market to show its hand. CSD is not just a concept, it's a confirmation tool built into the algorithm structure of the market. Understand the buy and sell programs, wait for the shift, and then align with the delivery. Okay, go back, rewind the video, look at the examples, and then identify these examples by looking at each turning point in the market, where you will be able to see that change in the state of delivery, where the algorithm is changing from a buy program to a sell program, or vice versa, and that market structure shift is the confirmation of that change in the state of delivery. Remember, it's not just a pattern, it's a confirmation tool built into the algorithm. I hope the video is useful. Go back and study the charts. I will now talk with you in a future lesson.